Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. Today, I'm delighted to be rejoined by one of our very, very first guests on Fintech Focus TV, Rupert Bull. It is wonderful to see you again. How are you?
Very well, Toby. Thank you very much. Delighted to be here again.
Great to see you. So slightly different. Yeah, took the words out of my mouth. They're very different from where we're sat in the cozy office in the first time out, and now talking from our various home suites as they are now. Look, the Disruption House and everything you've been doing is a really fascinating sort of area. Tell everyone a little bit who hasn't heard from you before a little bit about what you're doing and your background, if you would.
Fantastic. So my background is I suppose what officially counts as a serial entrepreneur, in that this is my second business that I've founded and growing. The first business I built and sold to Boston Consulting Group, and that really benchmarked investment banks and their asset and wealth management divisions against each other around technology and operations. So I suppose I've really been in the fintech space before it was called fintech, when it really was just technology for finance. And I think, what we're doing at the Disruption House is focusing very much on the early stage emerging technology vendors, and recognizing that, one of the big challenges in I suppose the enterprise software space is connecting with large organizations and navigating through them, and actually really helping to demonstrate your capabilities, competencies, enterprise readiness to those guys. So the backdrop is really fintechs, if we want to use that word, are early stage B2B software businesses. 60% of early stage B2B software businesses fail in the first 5 years. So there's a kind of innovation paradox, risk premium, if you want to call it, which is innovation and all the exciting transformations are coming from guys who are risky. And actually that means that the guys who are in that spectrum need to demonstrate their capabilities to the buyers, so the buyers understand where the risks are so they can manage them. Because institutions have been managing risk for years, and actually what it is, it's a different risk, and if you understand it, you can manage it. So that's at the heart of what we do.
I think there's an interesting starting point on that, actually, because look, there is when you're there and looking at those sort of B2B startup businesses, there's a lot of pressure, an increasing amount of pressure on those things from this time. But there's also a sort of route to navigating that, isn't there? Tell us a little bit about how the sort of part you're playing and what you're seeing as businesses who are setting themselves up well for surviving this period.
So I think one of the most important skills in any business in that first 5 year period is adaptability. So what we've seen is that the most successful businesses pivot once or twice. And so it's really important, in order to be able to pivot, to be able to listen. So I think you've really got to be good at communication and listening to your customers. And I think I suppose the art of where we are today is both, working with existing customers, because it's going to be easier to grow your business with existing customers. And that's really, I guess, an account management thing. But for those of firms who are at an earlier stage where they haven't got that large customer base, they're then going to have to look at working with partners to try and get in there. Because I think it's really about understanding, there's many opportunities emerging out of COVID, I think, for early stage tech businesses. But clearly, one of the challenges is the banks and asset managers, their procurement departments are overwhelmed, if you like, by trying to bring on board new people to help them deal with resiliency. So you've got this sort of wonderful opportunity, but you've got to kind of work out how to navigate it.
Yeah, I think that's. I mean, look, I've been speaking to people, throughout this period on a daily basis, and one of the things I think that's been sort of really, I guess, comforting as much as any is there's so many businesses that have really adapted so well to it, and there's so many changes that are happening at the moment. The agility of companies has been brilliant, and the financial sector in particular, and technology around it, has in many places just thrived through it. Tell us a little bit about where you feel that fintech can play its part through all of this.
So I think that there's immediate parts, if you like, and then there's kind of the post-COVID, so which actually in some ways will be very different, and in some ways is really a consequence of the challenges that were building up on the industry pre-COVID. So I think immediately people are very much focused on resiliency. So there's a new form of business continuity going on. So everybody had plans for going to another building. Well, clearly the virus isn't allowing that. So actually what it means is that everyone is now really doing from home what they used to do in the office, which means that they need new capabilities, new tools. So, traders, in order to trade from home, you've got soft turrets, you've got a whole range of, I suppose, regulatory oversight now, monitoring of phones being used from home, where they could be blocked out from a trading floor, cyber security, I suppose, increasing cloud capacity, cloud security. So those are things I think that are really about enabling people to do from home what they used to do in the office. And I think we'll probably be in that phase for a little bit longer. Not because I think people haven't got their resiliency going. I think most firms have, and they've worked out where they had challenges and fixed them. But I just think there's a sort of taking stock going on, because I think there's so much uncertainty about when do we go back into the office, how do we go back into the office, how many people can we have back in, that it's very hard for the leaders of these firms to strategize in terms of what are they going to do. So I think there's a little bit of kind of just holding breath, but I think what's also true is that coming into this crisis, there were quite a lot of pressures on businesses anyway. So the sun had stopped shining a little bit. GDP growth was down. Revenues were going down. In asset managers in particular, you start to see mergers there, and I think that's because the cost pressures were designed for the old world, and actually that means there's a lot of legacy technology, which is both, I suppose, existing incumbents and in-house. And those businesses, can either go on a sort of merger wave to try and get bigger and take cost out, but there's only so much that does, and that usually increases cost initially, or they're going to have to transform and go more digital. And I think that's kind of where things will start to come through, because if you go cloud native, you can reduce your cost of operating by 40, 50%. And those are the sort of savings I think businesses are going to want to make.
I agree with you completely. This digital transformation, I think, has got so many opportunities within it, and that sort of I think we've been speaking before about this sort of ever increasing cost of operation. How do you see this impacting that, and the sort of benefits from there as well?
So I think I suppose in the immediate term, it's going to be about communicating how, as a cloud native vendor, if that's what you are, you can actually help firms change their cost of ownership. I think the moment we're in a sort of fossilization where everyone's just focused on resiliency and I suppose locking down on what was the old world. But actually, as people start to realize that the back office systems only just coped with the demands of the high volumes that came through in late March, when you had the initial kind of market response to the crisis. You had STP rates that were not where people wanted to be. You've got all these costs built in. I think people are starting to, in our own business, be asked to help people landscape what are the options from early stage businesses to help them transform those businesses. And I think there is an appetite probably for a buy and build. Because I think, fintechs tend to be specialists, so they won't be able to solve the whole thing in the way that FIS or SS&C can do, for example. But I think those opportunities exist there. And so I think communicating about how you can help that journey is a really important thing right now. So have a vision of where the world's likely to be and start telling your story into it. Because we are starting to see early movements away from the fossilization by businesses that recognize they can't continue as business as was before, because the world has changed and they need to be doing it differently.
Yeah, I love that sort of concept of fossilization that you used, in the sort of laggards having to sort of move in and embrace new technology a little bit more. I think there's as you say, a real opportunity there for people to collaborate, and we're seeing more and more of that sort of stuff. And as you say, that there are multiple vendors providing multiple solutions to multiple issues at the moment. Do you see more M&A being the answer to that? Do you see more acquisition coming through all of this, which is probably another potential? We've seen heavily acquisitive companies in recent years, and it probably lends itself to it again with the likes of your Ions and Markets and such like as well out there. Do you see that being a theme, or
yeah? I think
we see a more diverse marketplace.
It's hard to know. I think there is if I look at institutions, they want the stability of large suppliers, and they want competition in the marketplace. They kind of want to have their cake and eat it. So they kind of, so I think, there are clearly some very effective operators out there who've grown their businesses. I think the challenge of an M&A strategy is always tidying up the different technology platforms that you acquire. And it's we've seen some PE firms look to try and, I suppose, develop vendors by having a platform strategy. And the issue is not so much the strategy. If you add A plus B plus C, you can dominate this marketplace. It's actually how do you do it in a way that, A is one set of technology, B is on another, and actually that migration path is a challenge. So actually, whilst it might join up in the revenues in I suppose in the business sense, it's harder to execute on. So I think in some ways you might well find a new type of M&A focused on, I suppose, cloud native solutions that are out there. Do it that way rather than necessarily folding off. So I think what some of these tools do is they present an opportunity for someone who's on 30-year-old technology to actually migrate their clients to something that's brand new. So actually, in the way that banks have talked about having sort of little fintech businesses like RBS NatWest has ESME loans or whatever, where you're using kind of fintechs at the balance sheets of the parent to do that kind of thing. So I think that might be a little bit more about how people achieve scale, but do it in a digitally native way. Because I think if you're doing M&A on, I suppose, historic deployed technology, you've got all sorts of issues about version control and moving people forward. So it's probably not as quick a cost cutting fix in terms of, so it might increase revenues for the acquirer, but actually in terms of getting to that lower cost of operating, it might be harder to do. And so I think people, not that I'm involved in these conversations, I imagine people will look at it slightly differently this time around.
Yeah. There's an interesting part as well that comes out of this is that the bigger companies have often put up massive roadblocks to more agile startups in terms of procurement processes. And I know you've been involved in this a fair amount over the last few years as well. Tell us a little bit about the impact that that's having on it, because I imagine that people, with this increased agility, that's had to flex itself a little bit. What have you seen there?
So I think again we're in a I suppose a parallel universe, if you like. So I think what we're seeing is that in terms of getting things resilient, firms have been adding some of these young technology companies quite quickly to make it happen, but they've been doing it rapidly without really following the EBA guidelines on outsourcing that came into effect on the 30th of September last year. So actually, those guidelines require you to do pre-contract assessing on a risk assessment, which is really about the sustainability of these vendors. And I think many of the procurement departments, they're set up to credit check businesses that are profitable and have been going for some time. I mean, often services business like yourselves are clearly naturally profitable because you're not investing huge amounts in technology. But if you're building some technology, it might be a 3 or 4 year build before you can actually have revenues. So you've actually got this investment-led approach to do it. And so I think the banks and asset managers haven't really got models to assess the execution capability of those leadership teams, and that's where we're starting to be asked to come in and help. Which is, we've selected this guy; they're really good at what they do, but we want to know if they're likely to be there in 3 to 5 years' time. We're not trying to buy someone for 12 months. We're trying to buy someone to be a partner, and I think that's where there is this realization that sustainability in the supply chain is really important, and that's also being sort of pushed by the regulators. The FCA has got a consultation going on till October, looking at all these, I suppose, operational resiliency factors. So I think we expect to see much more of a regulatory focus on this, and therefore actually that may in itself drive some degree of M&A in some of these smaller companies, or it may drive them into some form of umbrella relationships with bigger vendors where their balance sheet can be brought to play. So I think, we live in an inventive and creative world and people will work things out, but we are definitely seeing that the prism of, are you sustainable as a supplier, is getting more and more important rather than just, are you good at doing this?
That sustainability is a really interesting thing, because there will be victims of this, so just as there will be people who prosper massively from it. What would you say some of the sort of differentiating characteristics of a company that will sustain itself and grow, and one which will be slightly more troubled through this?
Yeah, so I think, clearly at one level, cash. So I think, every business needs cash. So depending on where you are in your cash cycle, you may have been a really well-run business and you just happen to be about to sort of, get into your next bit of fundraising, and the world's changed. So some people will just be unfortunate victims that they can't raise the cash to keep going.
Through timing.
Through timing, right? So through no fault of their own. However, I think that, when we're talking to the institutions who they are suppliers to, what we say to them is actually, look, if a supplier is challenged, you actually have 4 choices. You can internalize. Now, you may or may not be able to internalize. You may be able to give it to an existing incumbent vendor or things like that, but that's one option. Second one is you can swap it out, but obviously you've got to swap it out for another one that is going to be sustainable. You can start to look at business continuity assurance. So there are companies emerging in the space. We partner with one, AdopTech, who actually offer that step in and will continue to operate under a special purpose vehicle. Or you can invest in them. But if you're investing in them, you need to understand whether they're likely to grow. So I think, at one level, you have to do what you have to do, which is to be adaptable. You have to trim your costs as much as possible. You have to look for revenues as far as you can. But outside of that, you actually also want to make yourself look investable. So actually, have you got all the right things in place? Have you got the right advisors? Have you got, if you're in the business of B2B sales, have you got salespeople? If you haven't got salespeople, have you got a plan for it? So I think it's really, it's actually about adaptability and not just about being the best engineer. There's some wonderful technologists out there, but actually, if there's not a sustainable business wrapper around great technology, then the company is not a company. It's a technology project. So I think you need to look at yourself and go, are we a technology project or are we a business? And think, how do you be a business? So I think it's really about entrepreneurship in these times, which is really the skills about building a business, not just about building great tech.
Yeah. I think this has been one of my sort of pet subjects now for the last 5 years or so, where I've seen so many great technologists really miss that business element of it, and there's been sort of clashes between the tech side and the business side, and usually sort of won by the tech side, and then that victory is short-lived by the actual sustainability of the business around it. And look, when we've got a theme running through all of these sessions that we've been doing of opportunities and positives from negatives, there's a great opportunity for you and your business to add real value to the marketplace at the moment. Tell us a little bit about that. What are you doing at Disruption House to really sort of add value? Because it couldn't be more relevant what you're doing at the moment to help businesses through these sort of times, right?
Absolutely. So I think we're doing 2 things. So one is we're actually starting to help conference organizers and people around events to actually, I suppose, resurrect those parts of their businesses. So I think, if you think about business development and you hire a lot of salespeople for early stage businesses, what do those guys do? Obviously, there's digital marketing, which can carry on. But a lot of it was about, sponsoring exhibition floor space at events that were really important, where people were coming together. And that's what's disappeared. So actually the whole momentum of, in the B2B space. So I think what we've seen is that what we can do is, because we have a platform that we built to both help financial institutions find what vendors are out there. So it's kind of like a directory service, but it's sort of mapped to the industry that we're in, as well as the assessments that we produce and are published across it. We've actually got I suppose a way of bringing buyers and sellers together across the platform. So we're now starting to offer that out to, as I say, events organizers, trade associations, to offer really safe gated communities where you can bring people together. So it's almost like a digital equivalent to the exhibition floor. So we're not in a space like Zoom, or there are various online events organizers that have great software. What we're actually about is helping people match. I use the analogy that if you are a vegan and you want to go hill walking, you want to find another vegan hill walker. You don't want to find someone who's really good at making sausage rolls. They may be the best sausage rolls in the world, but they're just not actually of interest to you because you're vegan, right? So you want to find
vegan sausage rolls. They're all the rage these days.
But they're the thing, right? That's what you want. Vegan sausage rolls. So actually, in the same way, right? People are at different stages of maturity, capability, and all these other things. And actually, people want to be able to find people that they can connect with, and where there's this, I suppose, cultural fit, right? And actually, that's kind of what we do in our assessments. We help people understand across 48 underlying capabilities where they are on the journey. So people go, I love that thing, but I also understand their capabilities can connect much better. So I think we're providing that kind of tech.match capability. And we've been doing that, with our own platform into our own client base. But we're just finding now that actually there's a whole range of people who want to access it as well, to enable the community to continue to connect. People want to carry on, but you've actually got to find a way of accelerating that. So I think, our assessments are an accelerant, and the network effect is an accelerant too. So that's kind of, I suppose, the bit that we're doing for the community and helping you doing it. On the other side, I think, what we're doing is we're giving some reassurance to the institutions that these people, there are risks in them, but if you understand the risks, you can manage those risks. And that might be you need to put some money in, it might be you need to put a bigger project team on to make it more successful or things like that. But it's actually helping them to understand that if they wish to do these things, they can do them in a safe manner. And they can demonstrate that to the regulators that they've taken proper care, right? Because actually that's the thing, is there is no crystal ball. So I think it's really about, is there a concentration risk? If a business is built around 2 brilliant people, that's a higher risk than a business that is more distributed in its skill set, more balanced. And so I think you need to look at these things. And as a buyer, if you understand that, you can manage that risk better. And I think that's the other bit that we're really helping people with.
Yeah, I think both of those are fascinating. And look, if I think about one of the common themes, and we've got sort of various channels where we're talking to CROs and sales leaders at the same time as well, one of the big pain points has been the sort of loss of trade techs and the EMEA trading conference and the sort of physical networking and opportunities that come out of that. So for you guys to be bridging that gap is massively valuable at the moment, I think as well. Rupert, it is always a pleasure talking to you, and something which which I think we will have the third episode of our conversations in the far more immediate future than it's taken for this one to be scheduled. It's wonderful talking to you. Thanks so much for sharing your insight. For people who are listening to this and thinking, right, actually, there's real value that can be added to me and my business from what you've been talking about, how best for them to get in touch with you?
So you can find me on LinkedIn, Rupert Bull. I am on Twitter at Rupert_Bull, although it's probably, I should be more active than I am. But the easiest thing is email rupert.bull@thedisruptionhouse.com.
Fantastic. Rupert, thank you so much for joining us and sharing your wisdom. And we will look forward to having you, as I say, back very, very soon. Thank you all for watching, and we'll see you on another episode of Fintech Focus TV. Thanks a lot.
Thanks, Davey.